Welcome back, YouTube fam. Get ready for a mind-blowing ride through the financial world of Marriott International, one of the biggest players in the hotel industry. Today, we're diving deep into the numbers and stats of Marriott International. If you're an investor or just curious about the stock market, this video is for you. Buckle up because we've got some fascinating insights to share. Let's kick things off with the price-to-earnings ratio or PR. Over the trailing 12 months, Marriott's PR stands at 22.55, but the average over the last 5 years was 36.89. Now, if you're forward-looking, the PR forward is 20.95, indicating optimism about future earnings. But wait, there's more. The price/earnings-to-growth ratio is a mere 1.28. This suggests that investors might be getting quite a bang for their buck when it comes to future growth potential. Moving on to profitability, Marriott is no slouch. Their return on equity is a staggering 720.4%, and their return on assets is a solid 11.2%. This means they're making big money with their resources. The earnings per share or EPS is $8.87, and the projected EPS for the next 5 years is a whopping 17.6%. Investors must be smiling ear to ear with news like this. Speaking of smiles, Marriott offers a dividend yield of 1.24%, with a stellar 12.63% dividend growth over the last 10 years. So, not only is the stock performing well, but it's also paying back its shareholders. Now, let's talk about margins. Marriott boasts an impressive operating margin of 17.5% and a profit margin of 12.2%. They're not just booking rooms, they're booking profits too. What about the top line? Well, revenue has seen a positive evolution until 2019, but since then, it's had a bit of a roller coaster. On the flip side, earnings have been on the rise. It's like Marriott's magic wand is turning lower revenue into higher profits. That is why its price in the market has continued to rise, and it has obtained a total return in the last 5 years similar to VO. And here's a jaw-dropper: Marriott has no debt. Yes, you heard that right, a debt-to-equity ratio of 0.00. Long-term debt-to-equity ratio? Also 0.00. That's financial stability at its finest. Now, let's talk about returns. The average price return over the last 52 weeks was a whopping 26.82%. Investors have been riding high on this stock. Marriott International currently boasts a market cap of $60.37 billion. That's some serious market muscle. Alright, drum roll, please. Analysts predict that Marriott's price in the next 12 months will be $204.65, which represents a potential upside of 2.39%. But hold on, folks. I've got my own take. In my books, the fair value of Marriott is $193.55. That's just slightly below the current price, suggesting a potential overvaluation. It's always good to have your own perspective when investing. And there you have it, the nitty-gritty on Marriott International. Remember, investing is a journey, and understanding the numbers is your roadmap. Be sure to do your own research before making any decisions. If you found this video informative, don't forget to hit that like button, subscribe for more financial insights, and share this video with your fellow investors.